Hello, friends. Welcome to Vision Achieved. My daily advice about one company share, which I'll be investing today, and how I work and develop habit of buying at least one share of one company per day. And why do I do this? This is my daily habit. Instead of spending money on some unwanted, unnecessary expense, I like to study shares, share market, companies, and then buy at least one share of one company per day. So the company I have selected today is called Clean Science Technology Limited. Why? Because fundamentals are good of this company. In fact, very good. Some of the best company performing in top this would be. And the technical signal, right? This is the right time to enter this share because in coming few months, the stock will grow. So at the ET prime, economic time prime, the forecast for this share is like it is likely to grow to 2,325, 67% growth over a period of next 1 year, or minimum at least 20%, so 1660 in coming few weeks. In fact, the next quarter is looking very good. So we will do a detailed analysis. What could be the reason why this stock can grow 67%? So friends, this is Clean Science and Technology Limited, is listed on BSE as well as NSE. The share price today is 1,388, is growing, and total market capitalization is 14,000 crore. This company was incorporated in 2003, and they recently got listed. They came on stock exchange in 2021. They are into chemicals, specialty chemicals such as performance chemical and pharmaceutical intermediaries. Very good, doing amazingly well. So now let's go through the fundamentals. The management of this company, how are they performing? To determine that, we go through three ratios: ROCE, ROE, and ROA. Now, these are phenomenally high. Normally, I see in the range of 10, 12, 15, 20%. ROCE 44% is really good. ROE 33% and ROA is 28%. So the management of this company knows how to run the business and how to make money out of it. The debt on this company is just 2 crore, which is, maybe some short-term capital they would have taken for some cash flow issue, which is peanuts. Earning per share is 27. And because the debt is 2 crore, their debt to equity ratio is practically zero because the reserves are about 1,000 crore. Net profit they generated as on 31st March was 295 crore. So debt to profit is 0.01, which is very good, positive. Their earning before interest and tax was 400 crore, 396 to be precise. And the interest they paid was just 20 lakhs. So their interest coverage ratio is 1979, which means to pay 1 rupee interest of this 20 lakh, they had 2,000 rupees in their pocket, which is phenomenally good. And look at these numbers. The debtors day 57 and working capital days 196. And they have a cash flow of 297 crore, cash rich company. So now coming to the holding patterns. The promoters are holding 78.5, which is unusually high, very high. So it could become a problem because this company owners want to control this company. And for the retailers, stockholders, for us, it could have very limited play. The general public is holding 12%. DI and FI are holding marginal 4% and 4.76% respectively. So now this has an impact on the dividend strategy. So whenever the promoters are holding too much money, too much share with them, we also need to study how much dividend they are willing to pay. So their dividend yield is 0.37, and we'll go through the detail about that. So coming to their sales. Last year, 31st March, they did 936 crore, of which operating profit was 400 crore. Now, these are something phenomenal numbers. So 402 divided by 936 is a big percentage. So they are generating 42% of operating profit. and their net profit is 295. So 295 divided by 936 is equal to 31%. So this is a very, very profitable business. And that's why this company is going to do very well in future. Okay. So now let's see another thing. How is the next quarter? On 31st March, January, February, March quarter, they did 217 crore, which is expected to grow in April, May, June to 329 crore, which is a 51% growth. And that's why this stock becomes so interesting for us. Their operating profit for JFM was 105 crore, and for AMJ it will be 137, which is a growth of 30%. And their net profit, which was 80 crore for January, February, March, is expected to grow to 124 crore, which is like 54% growth in the net profit. And the earning, therefore, net profit is what? Net profit divided by total number of share is earning per share. So earning per share is growing from 7 rupee 58% to 11 rupees 70 paise, which is phenomenal. Now, this company does believe in paying dividend. So out of their 295 crore last year, 18% was paid as dividend to shareholders, which was close to 53 crore. And remaining money has gone back and reinvested in the business. And therefore, this number, SSGR, self-sustainable growth rate of this company is 18.6, which is very good. They have been paying pretty good dividend. The 5 years dividend is per annum, it comes to 74 crore. The average dividend paid in last 3 years comes to 55.6%, and dividend payout was 18%, as I said earlier. So this is a good company. Now let's see their performance. Sales performance. 10 quarters sales performance. Sales in June 2020, which was the peak of Corona time, they did 113 crore, which grew to 140, 125. Like that, they have been growing quarter after quarter to somewhere in the range of 220 to 240 crore this quarter. This quarter, they are expected now 300 crore. Similarly, their net profit, which has started growing from 42 crore to upward of 81 crore, and this time it is going to grow very well. So if you look at this company's performance is 42 crore net profit divided by 113 crore of sales. So 37% is their net profit. And if you look at the general for the March quarter, 81 crore divided by 217 is 37%. So it is very good, highly profitable company. Similarly, their year-to-year performance is also very good. 2018, they did 241 crore in the entire year sale, and their profit was 49 crore. So 49 divided by 241 is 20% net profit for the whole year, and which last year increased to 295 divided by 936, which is like 31%. Very good. So it's a highly profitable company, highly profitable business run by a very good management, and they are doing pretty well. Their cash flow is also, operating cash flow is positive, and their investing cash flow is negative because they are investing probably more in technology, purchasing new products, new technology, and investing in their technology. So that's why this is negative, which is a good sign. So now coming to the technical parameter. The technical side, the 200-day moving average, the stock got listed very recently in 2021. And so after the initial peak, now the stock was stabilizing, and it has recently given some good signal that it is likely to grow. Clubbed with the next quarter result are very, very good. So therefore, today is the right time. These 3 days are the right time to invest and get into the company, because very soon a green candle will come and it will cross this middle line, and then the stock will start growing. So now we'll buy one share. So friend, now we will buy one share of Clean Science and Technology. So I'll be using NSE website to buy one share of Clean Science and Technology, 1 share at market price. Okay. And if you want to know what's happening in the market, here is the update. The bids and offer are like this. So on left hand side, you have the bid price. People are willing to buy for 1388, 1387, 1387.90, and this price goes down. So buyers always want at a lower price and sellers always want at a higher price. So 1389 and 1389.50, 1389.55. So 28,000 shares are to be sold, 24,000 shares to be purchased, and this is the gap. Similarly, on an BSE, 4,800 shares to be purchased and 8,700 shares to be sold, and that is the gap. And some stock are getting exchanged at the market price. So what I'll do now, we will say market price and say buy. So we are buying 1 share of Clean Science and Technology at market price, and I'll say proceed. And here is the execution done. So is the order book? Yes, Clean Science and Technology, 16th of June, 11th of 11 o'clock, we purchase 1 share. Clean Science Technology, we purchase 1 share today as part of our daily routine. This stock will cross 1660, which is the first point where you can consider selling. But if you choose to hold it, this stock is expected to cross 65% from today at 23.25 within a year's time. So I suggest you hold this stock because quarter after quarter they generate good profit. My name is Pramod Deshmukh and I run this program called Vision Achieved. As part of my daily habit, I study with my team many stock. If you join our Vision Achieve program, in 1 year, you will be studying over 1,000 company performance and determine their share movement. And based on that, you can figure out when to invest and when to exit in a share by making decent profit. However, if you are not interested, just want to learn, keep watching my video and make an investment based on this video. You will definitely become rich by just buying and selling these shares. Okay. Tomorrow, Monday, I'll come with a new share. And till then, have a wonderful weekend. Thank you. Bye.